What's up guys? Today I'm going to share my top 5 stocks to buy in the month of November 2021. I spent hours of research going over hundreds of different companies and I found a few that I believe to have huge growth potential this month. We've been seeing some blood in the markets recently, but this has created amazing buying opportunities. And if you have been watching these videos, you'll know that we never buy stocks when prices are high. We always wait for them to go on sale. When quality companies drop in price, we're looking at the best Black Friday deals because we get a discount on an asset. Be sure to watch this video all the way through as I'll be giving you my full analysis on each of these stocks, and I'll be covering relevant news, significant numbers, price action of the stock, and my price predictions. These stocks are sorted from most expensive to least expensive, so feel free to skip to my stocks that may be more friendly for your budget. As a disclaimer, I am not a financial advisor and my stock picks are not in any way financial advice. This video is for entertainment purposes only, and this is simply a compilation of stocks that I believe will do well in the coming months based on my research. As always, make sure to do your own due diligence before investing your hard-earned money. Anyways, before we get started, please do me a favor and hit that like button, and if you're new to the channel, consider subscribing. I post weekly videos from my stock picks to teaching you how to read stock charts to my trading strategies. You won't want to miss out on any of these videos, so make sure you turn on your notification bell as well. So without further ado, let's get into my top 5 stocks for November. So our first stock is going to be American Water Works, or ticker AWK. American Water is the largest and most geographically diverse U.S. publicly traded water and wastewater utility company that provides drinking water and wastewater services to 46 different states. So surprise, surprise, my home state of California is in a water shortage. I could say a lot more on this, but I'll spare you all the politics on this channel. But one thing I did not know is that we are currently in the midst of a global water shortage. In fact, the WWF estimates that 1 billion people across the world lack access to water, and almost 3 billion find water to be scarce for at least 1 month out of the year. We often overlook water when it comes to consumer goods, but with drought being such a prominent issue both domestically and abroad, early investment in a company such as American Water could pay some nice dividends in the coming years. Coming over to the income statement, we see progressive but slow increases in total revenue, with current revenue at around $4 billion. Looking at the margin, which can be calculated by dividing gross profit by total revenue, we find that from 2017 to 2020, we had margins greater than 50%, which is well above our sweet spot of 40%. If you remember from earlier videos, margin is an indicator of profitability. So this is an important number to calculate when looking at the fundamentals of a company. Now, if you remember from my video on how to assess a company by looking at their financials, you'll know that margin is an indicator of profitability. Let's jump over to a key stat next. Looking first at the beta, we see that it is 0.27. Remember, this is an indicator of volatility, and that a value of 1 is equal to the stock market, while any value less than 1 indicates lesser volatility in comparison to the markets. This is what you're getting when investing in American Water. This stock won't rocket up overnight or even in 1 month. You've got to give it time. Looking at the PB ratio, we see that as a 4.7, which is a really attractive number, showing that it's potentially undervalued. When looking to invest long-term in a quality company, we're always looking for a PB less than 10, otherwise you risk exposing yourself to an overvalued position. We also see that AWK has an attractive EV to EBITDA of 22. Coming over to the monthly chart, we see that AWK has taken off since its inception in 08. It has been steadily rising, and now we're seeing that it has pulled back slightly from its peak and is currently sitting at $175. Now, I wouldn't recommend trading this since it moves so slow. However, if you'd like to start a position here, I'd recommend starting to buy in if price action retraces to a strong area of support at $168. Analysts have AWK as a moderate buy with an average price target of 182 and a high of 205. While these price targets ratings are rather low, I'd be looking at this stock as a buy and forget. Ultimately, a persisting water shortage can make water utility services more in demand, which should correlate with an increase in stock price. Alright, so my next stock recommendation is Beyond Meat, or ticker BYND. For those of you who aren't familiar with the brand, Beyond is a producer of plant-based meat substitutes that was originally launched in the US in 2012. They offer plant-based alternatives for pork, beef, and chicken. My girlfriend actually tricked me into believing that I was eating real beef the other night when she made stuffed bell peppers with this stuff. Hey, the verdict is out there, and I'm not a vegan by any means, but that was pretty darn close to tasting like beef. Anyways, you might be wondering why I'm recommending a stock that has been on a slide that began in July. Well, you shouldn't be asking me that if you've been here with the channel for a while already, because you know that sales on stocks mean that we buy at significant levels. But before we get into the charts, let's touch on some recent news really quickly. They fell 12% last week after blaming the Delta variant and a drop in retail orders for weaker revenue in anticipation of their report on third quarter sales that is coming out in early November. Now, retail sales currently make up 74% of total sales for the company, so that kind of news was reflected in its gap down in price. A key for BYND will be new product releases along with taste and cost. If they can achieve those things, we should see BYND take off soon. Coming over to the income statement, we can see a steady increase in total revenue, with current revenue sitting just north of $450 million. With a margin around 30%, we are near our sweet spot of 40%. Over on the balance sheet, we see that total assets have massively ramped up year over year. Coming over to the stats, we see that it has a PB ratio of 23 and a beta of 1.63. So where we're going to find gold is right here on the daily chart. Since July, we've been on a downtrend. Last week, it gapped down, creating almost a $10 gap on the day chart. Since then, it has partially gone up to fill the gap. I see the next significant level of support at around $80, and I'll be placing my buy orders here. Looking at the monthly chart, BYND has been in a wedge pattern. By June of next year, we'll be approaching the end of the wedge, where we can see either a strong move upwards or a move downwards. Personally, I'm a big believer in this company and believe that it can run up at least to $200 in the long term. Analysts have BYND as a moderate sell with an average price target of 97 and a high of 124. Regardless, I have a lot of faith in this company, especially in light of a meat shortage here. When buying this stock, make sure you know where you'll take profits and where you will cut your losses. Our next stock that has amazing potential this month is Snap. This is an American social media company that developed Snapchat, Spectacles, and Bitmoji. Recently, the price of Snap took a hit because of an earnings miss, while they blame Apple's iOS update, which lets users opt out of ad tracking, and warn that it could continue to hurt sales. In addition, supply chain interruptions and labor shortages pose a risk to the short-term outlook on the company, as they expect fourth quarter revenue to come up short of expectations. On the bright side, Snap reported 306 million daily active users, up more than 4% from the 293 million the company reported in April. That figure is up nearly 23% compared with the 249 million daily users the company reported a year prior. Coming over to the income statement, we're seeing steady increases in total revenue yearly. In addition, margins remain above our sweet spot of 40%, which is a strong indicator of profitability. Looking at their cash flow, we see that the net loss in terms of cash flow is narrowing yearly, which is a great sign, especially when it comes to the company's long-term outlook on bringing in cash. Coming over to the stats, we see that Snap has a PB of 25. This is a descending number and is close to an ideal value of less than 20. However, over the next few weeks, we could see price fall a little more, which could make this number closer to 20. Also, Snap has a solid beta of 1.26. Judging by this current seasonality, we could see the stock run with the market to close out the end of the year. Coming over to the day chart, we see that Snap is currently at around $54. As I mentioned earlier, poor earnings caused the price to drop, creating a gap from $61 to $73. Now, how can we find where the next area of support could be? Looking left, we see that from December through May, Snap held this area from $48 to $50 as a strong area of support. Price action is currently in no man's land, and I'd be looking for a price to fall a little further down to this range between $48 and $50 before buying. I'd be looking to hold shares and or call options with at least a year expiration through the gap close. Personally, also right before the gap close at around $72. Analysts have Snap as a moderate buy with an average price target of $76, which is around the top of the gap. Analysts also have a high target of $104. This is a stock that may take a few months to play out, but this is a great pick, especially for those of you with smaller accounts who are fine just letting your money grow slowly while studying up and learning more about the markets. And don't worry, I'm going to be in on this play with you all, so once our buy area is triggered, I'll be sure to let you all know. Also, I post a lot of my stock alerts on my Instagram since it's much faster than uploading a video on here, so be sure to follow me at Trader Isaacs. So our next stock is the ProShares Bitcoin Strategy ETF, or ticker symbol BITO. This is the first US Bitcoin ETF offering investors an opportunity to gain exposure to Bitcoin without actually buying Bitcoin. The fund provides capital appreciation through exposure to Bitcoin futures contracts. Now, as this is a new listing, there isn't anything to look at when it comes to the financials. Since its inception at $40, the stock rallied to $43, but now looks to be on a downtrend at its current price at $39. Now, I know that Bitcoin and cryptocurrency are risky investments. The sharp price fluctuations which happen in these markets on a regular basis mean that there are not a lot of investments for the faint of heart. At the moment, Bitcoin's price has rallied following approval of a Bitcoin ETF, and it has risen to an almost unprecedented level, making Bitcoin pretty expensive. However, with the introduction of the ETFs, we finally have an almost hassle-free way to invest in crypto safely, and it gives more people direct access to the crypto market. This is a prospective investment for me, so just make sure that if you decide to invest in BITO, that you take a measured approach and only invest with small portion sizes at a time. Alright, so my last stock for you is BOMN Boston Omaha Corporation, or ticker symbol BOMN. This is a holding company that is involved in several sectors including insurance, real estate, and advertising and telecommunications. Although this doesn't sound like the most exciting investment, what really intrigues me about this company is the way their two founders are allocating capital. They are allocating these funds to ultimately build more valuable businesses, such as adding to its existing billboard and broadband operations, as well as owning minority equity stakes in industries including home building, commercial real estate management, banking, and SPACs. What they are trying to do essentially is to build Berkshire-like conglomerate over the years. That one could be a massive company by the time I retire. But I love what they're trying to do. I think that their execution has been absolutely fantastic so far. For example, they invested $10 million in Dreamfinders Homes, and that stake is currently worth over $100 million now, which shows excellent allocation of capital. Looking at the income statement, we're seeing strong year-over-year growth in total revenue with margin above our sweet spot of 40%. Also, we see here that outstanding shares are at around 29 million. This is also called a low float stock. Both terms are interchangeable. Low float stocks typically have less than 100 million outstanding shares. With a lesser amount of shares that can be purchased, prices can stay high and increase more rapidly. We're also seeing an institutional ownership of 70%, which is a figure that I love seeing, especially in my long-term investments. The reason being is that the higher the number, the greater the faith of big institutions is, and this says a lot, especially since these institutions are hiring very costly teams to do extensive research into the company. They also have a market cap of $1 billion, which no doubt will increase. Looking over at the week chart for Boston Omaha, it is currently in a downtrend. However, the general trend is up, and I'd be looking to buy at this line right here, and a price breaks this line, I will be adding to my position at $28, which has functioned as a very strong support and resistance area in the past. For a company pattern after Berkshire with a $1 billion market cap, now is the right time to start adding to your position. This isn't a trade, and don't expect massive profits before year's end or even next. This is a long-term hold, so make sure to adjust your expectations in the short term for this stock. So those are my top stocks for the month of November. As always, remember to do your own due diligence on the stocks that I mentioned here. I've got a lot of faith in each of these stocks to do well and potentially double in value, but that doesn't replace doing your own research on them to determine if they are the right investment for you. Also, if you haven't signed up for a Robinhood account already, go ahead and click on the link in the description below to claim your free stock. Ultimately, it's a win-win because you'll not only be supporting me and enable to create more content just like this, but you'll also get a free share of stock as well. If you haven't already done so, please hit that like button and subscribe to the channel, and don't forget to tap that bell to get notified when I post a new video. Anyways, thank you so much for watching, and I look forward to seeing you all in the next one. Peace.